Welcome back. Markets news now. Asian markets mostly rose on Thursday morning as regional investors began to return from their Lunar New Year break, though Tokyo edged lower after a negative lead from Wall Street. Now, most trading floors have reopened, but business remains light with Hong Kong and Shanghai as well still closed, while focus turns on to the resumption of next week, for the next week rather, with China-US trade talks happening particularly out in Beijing. Tokyo's Nikkei remains the only major market open during that Lunar New Year break. It's dipped 0.6% to close out at 20,751 points. To the United States now, where Wall Street stocks edged lower on Wednesday evening. That comes as video game makers gave disappointing revenue forecasts, and investors awaited developments, particularly out in US, China. That trade relations situation is quite interesting. Now, the Dow Jones Industrial inched lower to 25,391 points, while the S&P 500 took a 0.2% hit to close out the day at 2,731 points. The Nasdaq Composite also seeing a bit of red there, losing 0.3% by close of trade today, and that finished the day off at 7,375 points. Quick look at how the markets fared. Of course, yesterday was a much better positive day, but today a big fall for the JSE, around 1.5% lower by this point in midday trade, sitting at 53,757. That's of 1 o'clock today. That market falling a lot there. While taking a look at the international markets, also seeing quite a bit of negativity come through there. Perhaps some profit sharing, some profit taking when it comes to how the markets are faring at present. Let's take a look at those numbers, and we'll get right into that discussion in a bit. Well, the market itself has been quite negative today, and it's even hurt the rand, sitting at around 13.58 rand, or perhaps it's the other way around. Now, of course, we've continued to have a little focus on the SOE, so perhaps we can also touch on that and the nervousness around, of course, the State of the Nation address scheduled for 7 p.m. this evening. But let's chat about all of this and a whole lot more now with Gerbrand Smith from NEFG as well. Gerbrand, thank you so much for the time, and thank you for joining us this afternoon. A bit of negativity today, so perhaps a little bit of nervousness considering the State of the Nation later today?
Yeah, I think so. I think from a South African point of view, probably a bit of overreaction. All awaiting the SONA later today. Yeah, we had a bit of a downgrade on Europe countries and European Union growth from the IMF. I think that doesn't help as well. And as you said, a few foreign eastern countries closed this morning for lunar holidays.
Yeah. What are the main elements to look out for on the global front? I mean, locally, yes, we will take a heed and take note of the SONA, but on the global front, we keep saying the same things. Brexit, the trade war as well. There seems to be nothing new, but the market just keeps on trying to find direction. Is there any direction in this market at present?
Now look, company earnings will depict the market going forward, and if you look at the company earnings coming out from the States, they're mostly brilliant and topping estimates. The estimates were a bit lowered over the last 3 months, but still the companies are coming out with decent numbers. Locally, we had 3 companies coming out today with better than expected numbers. I think Mittal, OneLogic, and the other one's now out of my head. Northam came out. So decent numbers coming out from some of these companies.
Particularly that mining sector, though. I mean, just taking a look at Northern Platinum's numbers, which came out today, I think it was a 190% increase that they expected as well there with regards to profits. That's a big jump.
It's a big jump. So the mining companies are doing well. We saw Impala and some of the platinum players coming out the previous week as well. So decent numbers from them. Although if you look at the consumer market locally, you had the shocks of Shoprite and a few others previously, and that's probably still some places to avoid for the next year.
So you reckon if growth stays low, those sectors are bound to continue being battered and bruised?
I think so. And if you look at the consumers' outlook for the year, we certainly know that there's a few job losses coming as well. There's a lot of restructuring and some of the SOEs, etc. Probably difficult and tough decisions that needs to be made by government. But it's unfortunate, but it probably has to be done.
Yeah. Where do we turn to then? If you were to look at a sector for the year and say to yourself, yeah, perhaps we should go into this area a little bit more, maybe not necessarily the best sector around, but in a tough time like this, may offer some sort of help, where would you go?
Yeah, look, I think there's decent companies in South Africa, and normally the South African market doesn't depict the local economy. So I think more than 70% of our earning streams are actually from offshore countries. So we got great companies listed on the JSE. I think if you look at some of our bigger global companies like British American Tobacco that's listed here, trading at an 8p multiple at the moment and an 8.5 dividend yield at the moment. It used to be 900 Rand a share, it's now 450 or 480 Rand a share. I think there's lots of opportunities, but it's share specific and a little bit of area specific for the year.
Yeah, so you have to really look tight and look to find something that works for you. The Rand weakening to 13 Rand 58 as well, that's bound to shape up things, particularly with the banking sector. But the currency itself, all this weakness, where's that coming from? It's shown some resilience for a while. We say 1358 is weak, but it really isn't, right?
Yeah, look, nobody probably knows, but my gut feel tells me that we're getting closer with Sona now. There's a bit of pressure on that. We had a huge run in our debt markets. So we had a bit of inflows in January and February. Bit of profit taking, probably not too bad. And then I think Mr. Mboweni will probably have a tough time of his budget speech. You saw earlier your own graphs that you put up on the screen. The debt is certainly a problem, and I think when you look at the budget and what he has to play with, not many new rabbits that he can pull out of his hat. So probably a bit of weakness coming next month or two, and then we'll probably see some consolidation again.
And then it has to restructure. If the case is indeed that they do restructure Eskom, how you configure that debt is also going to be very difficult. Does government take it on? We probably can't afford to take it on, right? Let's get your sentiments for the state of the nation. What would you like to see come out of that address today?
Yeah, I think that they've done the right things and the right noises came out over the last year. So corruption is something that they need to tackle locally. We know that SOEs is an important sector that they need to turn around and get them viable again. And especially Eskom, what they're going to do with Eskom. There is some hints that they're going to say something about Eskom tonight. They've been talking in the media about it for a while. Let's see what they do. But there's certainly SOE intervention. And hopefully a bit of infrastructure spending long-term wise, because there was a lot of money spent over the last few years, but I don't think much of that went to the right infrastructure locally. Yeah,
and I suppose the growth question comes into play every single time when you just consider that South Africa is struggling. Overall, your sentiments for the remainder of the year, do you think that the market will begin to gather up steam, find some sort of a direction, or is it really going to be event-based? Because we have quite a few events sort of coming up, especially in the first half of the year.
Yeah, I think some of these events can probably get sorted out, so that makes me on a positive note. It all depends on what the American market is going to do. I'm scared of them, and there's a lot of spectators and models that suggest that they go into recession in 2020.
That's scary.
If that's true, then maybe another down leg. I don't hope so. South African markets are seriously cheap. It's not as cheap as it used to be in 2009, but it's much cheaper than any of the other years after that. So there is value in the market, and I think we'll have a decent year.
All right. Well, Gerbrand, appreciate your time, bud. Always great chatting to you. Gerbrand Smith is from NEFG. Of course, the big faller today thus far has been the industrial counters. They're down nearly 2%. So the market following suit as well, around 1.5% lower at this point in time to suggest above 54,000 points there. Another big fall as well for the financials. So getting battered across the board. That's where the buck stops when it comes to the markets. But South Africa's economic growth does, of course, remain sluggish at best. Now, President Ramaphosa's address is expected to touch on the failure of the economy to grow fast enough to tackle unemployment, corruption, and even the funding of those state-owned enterprises. Now,